Alrighty, traders, good morning, good afternoon, good evening, and welcome to the morning coffee session. This morning, you can see that I am pretty casual this morning. Got my cup of coffee ready to rock and roll. We're going to go ahead and take a look and see what's going on in the market. We had a lot of movement over Sunday. If this is the first time you've joined my session, we've got multiple trades in. We did have, of course, the flash crash taking place on Sunday. Tokyo market crashed, not quite, but literally almost. We had the U.S. oil over the weekend gap. So we had a weekend gap over the weekend at the start of the session on Sunday due to the fact that there is now a oil war or oil price war that's taking place between the Saudis and, of course, Russia. And that's created chaos in the market. Oil dropped down to 27, almost got to $26 a barrel. And we're going to go ahead and take a look, see what's trading at today. A couple other things as well. Obviously, if US oil is plummeting, then we are going to be expecting Canadian dollar to go ahead and lose ground against major currency pairs. So Canadian across the board should be seeing the other pair or the other currency rally against the Canadian dollar. That's what we're seeing. It's settled down a little bit. Since yesterday, we've seen the market settle down a little bit. Not quite moving as violent as it did on Sunday, but this means that this could just be a pause before the next move. Now, what we're going to do is we're going to look at the larger time frame, assess exactly what it's done, and see what the next move is going to take, or what the next move is going to be. So, with that being said, hopefully everyone is having a good morning this morning and ready to rock and roll. We're going to go ahead and take a look at the setup that we have, and I'm going to go ahead and jump to the fundamental calendar first. I want to go ahead and take a look and see if there's any further surprises this morning. And the news out this morning looks like we've got a very quiet Tuesday. Very quiet Tuesday. No news coming out this morning. So the markets haven't been quite so volatile this morning due to the fact that I think we've had the major shock, if we can call it that, on Sunday. Now, with that being said, we'll also notice that we do not have any additional information that we need to be too concerned about here with the fundamentals. Nothing coming out this today that's going to spook the market. I think the markets are pretty much spooked already. So, with that being said, let's go ahead and take a look at some technical analysis and assess what the technical analysis is telling us right here. All right, so I'm looking at the 1 hour. I'm going to skip this over. I'm going to go to, oh, sorry, this was supposed to be the daily. Let's go ahead and flip this over to the daily. All right, so here we have the daily time frame. Aussie, Canadian has pulled back a little bit since the close yesterday. See, it's been a bearish trading day today. And so this is the correction move, right? So as price goes ahead and pulls back, we have a correction move, and then price is going to go ahead and retest again the top of the range. Remember, we did say that this is the level we're anticipating price to move to. Now, for those that have not been in our session yesterday, let's take a look at the currency pairs that we've got currently that we are holding right here. You can see we've got a whole bunch of currency pairs that we're in right now. And here is the list of trades that we're in. We're in the Euro, New Zealand dollar, Euro Aussie, Euro CAD, US dollar Canadian, Euro Pound, Euro US dollar, Pound CAD, Pound US dollar, Euro JPY, Pound JPY, Pound Aussie, and then Aussie JPY. Woo! All right, so we follow, I believe, 17 currency pairs, and out of the 17, we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So 12 out of the 17 currency pairs we're currently trading this morning. Now, also keep in mind that our risk is staying at the low end. You can see I've got multiple positions in that are 10, 7, 6, and 7. And even though I've got all of these positions in right now, I'm currently showing around about, let's take a look right here, just about the 2.5% drawdown. That's the drawdown I'm in right now, 2.5% drawdown. Now, everyone has their own risk tolerance. I've spoken about this before, and I want to make sure that we're clear on this. Everyone has their own risk tolerance, what they're willing to accept on each trade, what they're willing to accept overall on their portfolio, right? So don't look at one person saying, well, that guy's risking too much and this guy's risking too little. It doesn't matter. It depends on what they feel is comfortable and what they're willing to risk, because everyone has their own goals of what they're trying to achieve on their trading account and what they're willing to risk in order to be able to achieve that result. Now, granted, everyone has their own risk tolerance. I get that part, but remember something, there is a line in the sand that you don't want to cross, okay? My wife keeps saying that. Gary, don't cross this line, all right? You know what's going to happen, right? Now, the deal is this. There's always a line in the sand that you don't want to cross when it comes to managing your trading account, because you don't want to get into a situation where you're over leveraging your trading account, that you're not really giving yourself a good opportunity to be able to get back into the market and stay active. All right, you're crossing that line where you may end up running out of capital, that you have to fund more capital into the account in order to sustain your positions, or you're simply going to be margin called and the broker's going to make that decision for you. And you don't want that to happen, all right? So that's the line in the sand. Make sure we don't cross that line. Now, I'm going to leave that up to you, because, listen here, I'm no CTA. I cannot tell you what you should and should not be doing. All I can tell you what I'm doing, all right? And what you decide to do on your own trading account, well, it's everyone for himself, right? So I'm going to go ahead and address how I'm going to manage my positions, how I'm going to manage my trading, all right? And so you need to do the same for yourself, okay? Now, if we go ahead and take a look and see what's going on right here, here we have the positions that we've got currently right now. I'm going to go ahead and take now. Listen, I want to go ahead and say this. We've taken some losses already, all right? So with me having the euro New Zealand dollar in right here with 4 positions, it's 4 positions because I've already taken some losses, all right? I've already taken some losses. I believe I had 10 positions at one point. I think we've closed out 6 of those at losers. So which means that when I'm in profit on the New Zealand, I'm going to go to the Euro New Zealand right here. And let's see here. Euro New Zealand. Where is it? Oh, there it is. Okay. When I go to the Euro New Zealand dollar right here, I'm looking at this and I'm going, well, I've already taken some losses on this trade. Now, it doesn't necessarily mean that if price comes back down to my first entry point, because I have some rules where I have multiple positions in. When the price comes down to my first entry point, I think about looking to take profit on this. In this case now, no, I'm not. I'm still looking for my target down here, because we got a far way move. We got about 1,000 pip move. All right, we got a 1,000 pip move on this before we get to this target. All right, so we've got a lot to cover on this trade. Now, I could go ahead and simply say, well, I'm going to cut my losses, get out of this trade, and go ahead and look at something else and look for different opportunities. I can certainly do that. Now, I've taken about a 4.5% loss already this month, and I want to recover that, and I want to go ahead and gain more. Obviously, I'm not here to break even. I'm here to make money, but at the same time, I have to be realistic about what's going on. So let me go ahead and take a look. So let's put it this way, and I believe I said this before in the trading room. I said that I'm going to be looking at the portfolio in its entirety, which means that I'm not going to judge each currency pair on its own. I'm not going to go ahead and evaluate my trading account based on each one on its own. I'm looking at the whole account, and so what I'm looking for, even though I'm down 4.5%, what I want to look at is when I get to a position where I've covered that loss and I've made some money, and I still have the euro and New Zealand dollar not getting to its target, and I go ahead and assess the trading chart, and I notice that it's going to take me a long time before I get to my target, but I've made money overall, then I'm more focused on closing up, restarting again, and getting back in and start finding the new opportunities that are presenting itself. Because if you take a look at this week, traders that started trading this week, you're not doing too bad, all right? Take a look over here. There was a trade this week on the euro, and I'm going to go to that chart. Actually, here we go. there was a trade on the Euro New Zealand dollar right here that offered you, see here, this is the daily, here's the 1 hour. All right, this is the one I'm looking for right here. All right, so this is the trade right here. At the top of this run right here at the top, was a opportunity for traders to get in based on this week's target. And if you look over here, this week's target moved all the way back down to its target from the entry point that offered a trader, it's actually 1,011 pips, right? And that was within a few hours, right? Very quickly did it go to its target. So traders that went ahead and traded this week and picked up one position, they went ahead and picked up 1,000 pips. Now 1,000 pips doesn't necessarily mean you're making a big rate of return on your investment, right? It doesn't mean that, because pips doesn't really equate to what your rate of return is going to be. But just to give everyone an idea what that looks like, yep, they would have picked up around about, it looks like around about 1,000 pips on that trade. Now we've gone ahead and marked it off here. There it is there. So it's a little bit more than that. Call it 1,011. All right, not much more. So let's go ahead and mark it off 1,011. I'm just going. So 1,011 pips were picked up, right, on that trade. Now, the deal is this. The reason why we want to go, the reason why I said that I want to go ahead and look at the trading account in its whole entirety is because I want to make sure that if the market, all the trades I'm in is showing me profit, I want to go ahead and get out so I can get into new opportunities. Opportunities just like we had on the Euro New Zealand dollar. If I was not in on a trade on the Euro New Zealand dollar heading into this week, I would have picked up that 1,000 pip move, all right, traded it, got out of the market, and then we're looking for new opportunities. And that's what we're looking for. We're looking to get in on new opportunities all the time because we don't want to really hold on to positions too long. But at the same time, I'm also interested in building up capital, right? So adding more positions in so that I can have a bigger position in at a much better price so that when price moves to my target, I'm taking more profit home. So I'm also looking at that, but at the same time, I'm being realistic about what the market can offer me. So let's this morning go into the details of exactly what is the realistic move that I can anticipate on the Euro New Zealand dollar in a good time frame so that I can go ahead and gain profit from that trade, but also not stay in the trade for too long that it just sits and heads sideways. All right? So let's go ahead and take a look and see what's going on right here. Now, good morning, everyone, by the way. William, good morning. Good Jamie in the house. Good morning, Jamie. Denise, good morning. Karen's out here. Good morning, Karen. We got Rex. Rex, good morning to you, buddy. We got Sharon. We got Doug, David, Jason. Jason, I'm glad you're back again. Jason took a bit of a beating this week. Jason, we're going to get back again and just do our very best to go ahead and continue with the strategy, my friend. All right, good. So let's go ahead and take a look and see what's going on. So as we go ahead and look at the situation, I'm going to go ahead and take a look at the larger time frame here on this pair. Right? Now, what I am excited about is this big spike to the upside, right? And I'm expecting price to start moving down. What I also would like to see is I would like to see price trade back below this previous resistance, which is now becoming support for the market, and of course this upward trend line. If we can get back below that, then we could be expecting price to drop back down to this trend line here, but also to that consolidation support level, and then on its way down to this point right here, which is going to be the upward trend line. So there's a lot of levels of support we can go to. Now, just so that you know, as a swing trader, and a lot of times you've got to look at the market as a swing trader, even though we're using a position trading strategy, which is also counter, we're also going to look at it from a swing trading point of view. As a swing trader, when price comes up to resistance, whether it's come up to this point of resistance up here at the top, right? Which is this one right. Oops, there. Let's go ahead and do that again. Whether it's come to this level right here, all right, or it's come to this level. Why do I keep doing that? When it comes to that level, we're always going to start thinking bearish from a swing trading point of view, because what we want to do is we want to trade from this level when it hits resistance and start trading it back down south, back to support again. If it holds up here this resistance, we want to trade it back down south towards support again, all right? And then at this point, we'll be thinking bullish unless price moves down below and comes back to retest, then we'll be looking bearish again and sell it back down to this point right here, all right? So we'll be looking at that all the time. Now, what we're going to be doing here is we're going to take a look. And so from a swing trading point of view, I believe on the Euro New Zealand dollar, I've already started thinking bearish. There it is there, sell at resistance. All right, so I'm thinking bearish already. I've got my system deployed, ready to go ahead and sell at resistance. All right, and I believe we may even have a trade in. Let's take a look here. Oh, there it is there. We're actually in on a short already, based off a swing trade position. All right, there it is there. I'm looking to sell the market short. I've got a price in at 79.56. I got my stop loss at 80.92. All right, and I'm looking at a profit target around about 75.49. So 75.49 is around about here or just slightly above that. So I'm already starting to look for short-term opportunities based on swing trading going south. Okay, so that should answer your question as to what we're looking to do here from a position trade, from the current position that we're in right now. And we've got multiple positions in. So we are looking for price to continue to move back down south, all right? So we're in. And if this doesn't work out, if price doesn't go back below here and goes back up higher, then we'll be looking to sell once again at the top here, looking to sell back down south again, right? So currently we're holding on to some shorts, and we will continue to hold those shorts until price moves up to our target. So this is it right here. So the Euro New Zealand dollar, 4 positions in, we'll continue to hold that position right there. Now, take a look at the Euro Aussie. Euro Aussie has 10 positions deep. Let's go to the chart. All right, look at that. Price, and I'm going to go ahead and zoom in a little bit. Price is a little sideways at the moment today. Not a lot of trading, but with that big spike, we're expecting some sort of correction move. And we have been expecting a correction move on this pair, all right? There's no doubt in our mind that we're expecting some sort of correction move on this. Now, look, I'm not going to be discussing fundamentals right now. Right now, it's all about the technicals for me. We had news out this week, I get it, all right? But right now, it always comes back down to the technicals. Because as much of the market moves based on fundamentals, it's the technicals that are going to help us define where price is moving to and which levels which we should be looking to buy and sell at. So I'm going to continue to do so. And so here at support, I'm going to go ahead and continue, resistance, I'm going to continue to hold position short, looking for price to move below this trend line. Now let's go to the chart. I'm going to go to the Aussie, the Euro Aussie right here. And on the Euro Aussie, I can see I'm around about 126 pips away from my break-even point right here. All right, 126 pips. That price is trading at 172.26. So 172.26 is around here. All right, there we go. Give or take a few, right about there. All right, so right about here. So which means that when price comes back below, and it's already come back, you see right here, and tested the low already. But when it comes back to this price and trades below this trend line right here, I know that my entry point or my break-even point is safe. All right, as long as we stay below resistance. So if we stay below resistance, I'll be looking for price to move back down to the next level of support, which is going to be right about here. I said strong level of resistance, now support here at 165.72. So I know that we've been talking about this level the whole of last week and saying that price is looking to move there. And I'm still looking for price to move to this level. All right, still going to look at expect price to move down to this level, 65.72. So let's wait and see what happens. All right, let's wait and see what happens. All right, now this is the euro Aussie. So is there anything I can do on this currency pair right now? No, there isn't. I'm just going to wait and allow the market to do what it needs to do and make a decision once we trade back below this level. All right. The only thing that I have, the only control that you have on this strategy right here, all right, because the entry points are fixed, the stop losses are fixed, the targets are fixed. Although we can negotiate on where we're going to get out based on our targets if we don't expect price to move to our levels that we were looking to get out. But we are definitely, we've got one thing and only one thing that we have a lot of control over. And the one thing we have control over is how we manage our risk. I cannot, I cannot discuss that I cannot, what's the word I'm looking for? I cannot, all right, it is Tuesday. Come on, give me a break here. Emphasize, there we go. I cannot emphasize the importance of equity management, and I cannot, demonstrate how important it is by just showing the value of having good equity management in your trades to be able to sustain these type of movements in the market, because we're going to get these movements. Listen, if you have only started trading for the last couple of months and you've never experienced a flash crash in the market, prepare yourself for these type of things. The things that are happening here globally, all right, we've got to anticipate these type of moves, all right? And so those days where we can really get really aggressive on our trading and expect to be able to make good returns very shortly, you're running at a risk that at some time they could build up to a point where we could have central bank intervention, we could have flash crashes, we could have things like stock market chaos that's creating risk on risk off appetites. These type of things happen a lot now, all right? And before we used to have it maybe once every 3-4 years. Now it's suddenly happening every year. Maybe we're going to start seeing it twice every year. It's just things that we need to account for. And so when we do account for these things and we apply our risk management rules properly, we can still survive through this stuff and have enough buying power to get in onto other currency pairs that we can trade and make money out of to be able to subsidize the losses that we're taking on one pair, right? And that's why we trade with multiple currency pairs. So always make sure that we adjust for that. Okay, good. Good. Denise says target trading really helped me learn the importance and benefits of equity management. Absolutely. All right. Now if we go ahead and all right. So what I want to do here is I want to take a look at these pairs that we got current positions in, like euro. We're going to trade right here. This was on the euro Aussie dollar. We spoke about it this morning already. But we do have a trade that took place, right? Right? If you see over there, we had a sell trade that took place. Let's go see if the target's been hit on this week. And we'll take a look over here. So no, target has not been hit this week on the Euro Aussie. Let's go ahead and take a look at the next pair, Euro CAD. Euro CAD target has not been hit. Let's go to Euro JPY. Euro JPY price has moved very close to that target right here. In fact, let's see here. We came 12 pips away from the target. Now, if you haven't heard this from me before, I'm going to say this now. When you come this close to the target, traders can go ahead and start thinking about taking their profit and getting the heck out of Dodge. All right? Specifically, if you got in on this trade, take a look right here. Euro JPY, buy trade. 116.81. All right, so 116.81 was the entry point. 116.81 will put you right about here. Right there. Give or take there. There we go. So on this trade right here, You're currently right now, if you didn't take out your trade, you're looking at 190 pips. As price moved up to this level right here, you're 253 pips in the money, right? It looks like, based on this, we may have only had one entry point. You know what I'm going to do? I'm going to have to go ahead and flip over to another chart because I've got more information there I can look at. Let's go to Euro JPY. All right, here we go. So, yeah, so this is the entry point right here. So that's pound. All right, there it is. So 118.81. Yep, there it is there. There's the entry point right here. And like I said, 250 looks like 255 pips or maybe 253 pips right here would be your profit taking level right here. So as price comes to this level within 20 pips, I said within 20 pips. And I mentioned this before. I said price or resistance is not a defined price, it's an area. So if you come within 20 pips of that area and you're 253 pips up in the money, is 20 pips, in this case 12 pips, is that worth holding on to this position right here? Right? Absolutely not. Right? You want to go ahead and look to take your money and get the heck out of Dodge. Right? You want to take your cash, get the heck out of Dodge. You don't want to be sitting into trades like that. They're going to be offering you a very small opportunity that's left, like 12 pips right here. Come on, take your money, get the heck out. So traders, watch this. If you get close to your game, if you're not out already, go ahead and look to take your money. All right? That's on that trade right there. Let's go ahead and take a look and see what else we've got. All right, we've got that's Euro JPY. Euro New Zealand dollar, we've already hit the target this week. So that one is out. Let's go to Euro Pound. Euro Pound, we've hit the target on Euro Pound. I believe there was no trading opportunity on this week. Yep, hit target this week. Let's go to Euro US dollar. Euro US dollar has not hit its target this week yet. Let's go to the next one. Pound Canadian. Pound Canadian moving a little sideways since the last gap. We haven't filled the gap of the weekend. So I'm going to say that, hey, traders, listen here. If we come back down to this level right here and price doesn't break there and it stalls there, maybe take your profit there because we could be heading back up north. And remember, with the US oil weakening, then this may be just a retracement move before it goes ahead and continues to rally up. So if price comes back down here, we're going to possibly look to get the heck out of Dodge. Right? Let's go take a look at, let's go to JPY, Pound JPY. Pound JPY also came pretty close. Okay, this is 49 pips, so maybe traders would be holding on to this a little bit longer. 49 pips away from the target. Traders would have got in. What price did you get in on this one? 133.67. 133.67, which would be around about 67 is here. All right, so this is it right here. The average true range is 151 pips or 155 pips. So you're probably in on one position. You're up 354 pips there. Now you're up about 253. All right. So as price gets there, why stick around? Take your money, get the heck out of Dodge. Let's move on to the next one. That's Pound JPY. Here's Pound New Zealand dollar. Pound New Zealand dollar hit its target. Did we get in on this trade right here? Pound New Zealand dollar, yes we did. There was the entry point, 1044 on a sell. Right, 1044 would be just about, I believe, on this close of this candle. Yep, there it is there. So this one's closed out right here and profited 573 pips. 573 pips. I'm going to put this in and close it out. $573 right here. and this is closed. Now, very, very important. All right, I'm very transparent about what's going on, how the trading is going right here. So I'm going to go ahead and add in the pips that we've taken losses on for this week, and I'm still going to. I haven't done that yet, to add it to the mix right here, because we did lose, like the New Zealand US dollar, we lost like 7,000 pips. It wasn't a big risk percentage. I think we calculated something like 2.5% or something like that. I can't remember exactly, but it wasn't a big loss, but we did take some losers that we've got to go ahead and account for. All right. But let's go to the next one right here. That's euro. Sorry, that is pound. Pound New Zealand dollar. Let's go to pound Aussie. Pound Aussie, we came pretty close to our target right here as well. 61 pips. Maybe traders are still holding on to that one. Let's go to pound US dollar. Pound US dollar, we haven't hit a target this week on pound US dollar. Let's take a look at Aussie JPY. Aussie JPY has not hit its target this week. We're coming very close to filling that gap up. All right. Last bit of the rally. If we don't get to the target, take your profit. Get the heck out of Dodge. That's on Aussie JPY. Let's go to Aussie New Zealand dollar. There was no trade this week. Let's go to Aussie CAD. Aussie CAD paid out quickly this week. There you can see, yep, 173 pips. We paid out pretty quick on that. Let's go to Aussie US dollar. There was no trade this week. Let's go to New Zealand CAD. New Zealand CAD paid off very quickly on this one right here. Let's see here, New Zealand CAD. Yep, we picked up 155 pips on that. That was a quick in and out. And then lastly, on US dollar Canadian, we have not got back to our target yet on this one right here. All right, so these are the trades that are still active. You can see right here, active trades for the week with the volatility that we had. This week, we've paid out, for this week's target, it's paid out 1,900 pips. But that doesn't exclude those traders that were in a couple of weeks ago with old positions that have taken some losses this week, like myself. And here's the transparency right here. All right, these are the positions that I've taken some losses on. And let's go ahead and actually do the math. All right, so I'm going to take on all the Euro New Zealand dollar setups, and I'm going to add it up right here. And I'm just going to add up the pips. So the first one was 1149. And then we've got 1149. Then we've got the next one was 1294. So 1294. Then the next one was 1419. And the next one was 1467. And the next one right here was 1112. 1112, that's a lot. And then the last one right here, 1114. 7,555 pips right here. All right. So 7,555 pips. I'm going to put this in here. So this was the Euro New Zealand dollar right here on all positions. There it is there. So minus, and we still got positions in, but this is minus 7,555 right here. All right, there it is there. Now, let's go ahead and take a look and see what else we've got going here. We also took a loss here on the, let's go take a look at the Canadian. Euro Canadian, we lost 904. Plus we lost, let's see, CAD, 932. And we lost 921. 2,750, 27.57. All right, there it is there. All right. Let's go ahead and move this up so we can see what the number is. There it is. Let's go ahead and move to the, what else we got going here? So that's covered there. New Zealand CAD. They picked up 160. So I guess we've got to close out 160. I believe that was a trade for this week. Yeah, I think it was a trade for this week right here. So we actually picked up 160 pips, not 155. So we did go ahead and plot that in. And then let's see what else we got here. That's New Zealand. And then Aussie Canadian 177. We picked up 177 Aussie CAD 177. So let's go ahead and make sure that's right. So this is actually 177 right here. All right, cool. All right, so there it is. So this is what we're up 1921 for the week. But from previous positions, we lost 10,312. Right. Now, again, if you look at the rate of return, right, we lost in percentages. We lost, what is it? 4.8%. That's our loser right there, 4.8%. And this is what, it actually shows me a little less pips right here. It shows me 9,976, but that's probably not accounting the trades that we had last week. So that's where we lost right here. Now, let's go ahead and take a look and see. All right, so we've got trades that are still currently open. And the positions that we got open at the moment right now is accumulated to, let's take a look here. Actually, it showed here, did we pick up some more positive trades? Oh, hold on a second. I just realized that we closed out a trade here on the pound New Zealand, 575. I think maybe I've added that already, 575. New Zealand, pound New Zealand, 575. Okay, close enough. 575. Okay, that was a positive one. Yeah. All right, so this is the deal. We're actually in percentages for the week. We're down 4.5% for the week. All right, 4.5% for the week. For the month, we're down 3.77% right here. But we've got positions that we're currently holding in right now, in open positions that we are. There it is. Let's go to this one right here. Here's the open positions right here. Some of them are in the money. Let's take a look at the ones that we are in the money already. We're up. Let's see here. Let's see the positive ones. This one we're up 180 pips. 180. Let's see. This one we're up 60. Let's call it 70. So let's call it 250. 250. This one we're not up anything here. Oh, and by the way, these are times 4 positions. So 80 in this case now 280 pips. There it is there, 280 pips. Times that by 4 positions puts us about 600, close to 600 pips right there. Oh, my bad. Times 4 positions, we're actually 280. No, that's a lot more. 280 times 4. 1,120. We're up net 1,120 pips on that. This one we up 1 position, so that's 180. So we've got quite a few positions in here that we have to go ahead and consider that we're in the money on. So we're not completely out of it yet, but we're definitely going to go ahead and monitor it throughout the course of the week. And here's a trade right here, also moving up. It's got 2 positions in 119, so that's 220, 240, 240 pips right here. So we'll have to take a look and see. This one's up 219 pips with 1 position. Right, so we'll go ahead and look and see what the market brings us at the end of the trading week. So we've got a lot of trading still to take place this week. I still believe we're in good position to be able to make up our losses this week, and also to get us back into profit. Now, I want to go ahead and say this and make sure that everyone's aware of exactly what I'm saying right now. Be very, very clear. I want to be very, very clear on this. Rome was not built in a day, and trading recovery is not built in a day either. If we get good recovery and we make our profits back inside the same week, fantastic. I'm anticipating, based on our position that we're sitting right now, that we should be making our profit up in the week. But let me tell you something. Don't put that pressure on you. All right. If you're taking some beating over Sunday's flash crash, don't let that beat you up, and don't let that put pressure on you to recover quickly. I've been trading for 25 plus years, and I can tell you this much. I've been in that position where I've got some big losses that you're trying to recover quickly. In fact, I've had clients that we've been trading, and we've had these abnormal market conditions taking place that put us in a bad position, and we have to recover. And when those clients come to me and say, "Hey, big dog, I want you to go ahead and get back quickly. We need it," and I see any sort of panic in their words, my first thing is, this is how I'm going to recover. This is how we're going to get back, because we can take back our profits this week. We can get back our profits this week and start again next week. Or if it takes us 2-3 weeks, I'm okay with that. The one thing I don't want to do is risk any more that I have on my trading account to get back I don't want to chase my losses. All right. And very important that we don't do that. We don't chase the losses, because if we can be patient enough, we know that the strategy we're following can show us anything between a 3 to 6% return per month. All right? We just need to be patient. And yes, we're going to have some drawdown months. We get that. We understand that. As long as we've got good equity management in our trades and we're managing that risk properly, we know that there's going to be a time where we have to call it a day and just recover our losses and then move on from that point. And so we have to be patient about our recovery. And if we're patient on our recovery, and if it comes this week, great. If it comes next week, great. If it comes a week after that, fine. All right? But we have to be patient, because the strategy that we are trading does bring profits back. All right? It does bring profits back. So we don't have to chase up losses. The losses that we take, a 3.5% loss for the week, is not a bad deal. All right? Or at least for the month. We're not in a bad position. All right? Because like I said, this type of trading strategy brings in anything between 3 to 6% return. So we should be able to recover. We've got a lot of positions in. We've got a lot of equity in the market right now. Once the recovery starts, we'll start banking in, and then we'll get to a position where we can go ahead and reset and restart again from where we were from our previous watermark highs. And that's what we need to do. Just be patient on that. All right, traders. Well, that's it. I've moved away from putting any bourbon in my coffee to straight coffee, so I'm just running on caffeine right now. I'm just kidding. I don't do that. All right, I just don't do that. All right, but we're going to go ahead and check out the markets tomorrow again and see what's happening. We're going to cover this again on Thursday. We're going to cover it again on Friday. All right, and we're going to watch and see exactly where we are, what position we're in, and we're going to make decisions based on that. All right, so we're going to go ahead and allow things just to play out itself, see what happens tomorrow, and of course the rest of the week, and then make our decisions. But there's going to be no speedy recovery expected. All right. If you have low expectation of a speedy recovery and it does happen, it's a bonus. All right. With that being said, traders, you have a fantastic day, and I'll see you next time. This is Epic Big Dog signing off.